Praise be Jesus. Many of you have reached out to us asking about the sell-off in the metals, inquiring, is this the end? Is the cycle over? We wanted to give you a little video summary that we hope will be helpful and quell some of your concerns. Bottom line, we believe this is the type of opportunity that you read about in hindsight that comes along only a few times in a cycle, where the fundamental case has not weakened, but due to technicalities and trading, the price point has cheapened, and it's a great entree. We have so many clients who have said to us over the years, physical gold, physical silver has made such a difference for our family. We've been able to use it to pay for education, to upgrade our homes. This is what gold has consistently done throughout history. This is what you want to be leaning into here. Can we promise you anything? No, we can't. But the probabilities are off the charts that because America can't pay our debts, everything that's happened with this conflict has only strengthened the case of the metals. So let's consider a few things. We think the most likely reason for the sell-off isn't central bank selling, and it's not futures margins calls. We think what we are witnessing is malicious trading intentionally designed to push the prices lower. Consider this first slide that we have for you here. This is showing the Asian Regulatory Authority fining this entity called Jane Street over $500 million, the largest fine ever given out. It was just given out last year for malicious trading, where they explicitly used options to push the prices of assets lower for their own benefit, despite how it would seriously hurt many of the investors. They felt that the presence and the behavior of this firm literally threatened the integrity of the financial markets in Asia. Here is a slide showing that the co-founder of this firm has also been highlighted in a report that Bloomberg picked up on, talking about him using money to help fund a coup, buying weapons of significant firepower. He later claimed, again, think of it, this person whose firm has made billions of dollars, that he was innocently giving this to humanitarian aid. We'll let you decide if you think that seems plausible or if you think this fella is a questionable figure. Why is this relevant? Consider this next slide. This is showing the top holders of the SLV. The SLV is the ETF in the United States that controls 20% of the world's silver. The largest holder suddenly is the same entity, Jane Street. Now, you may say to yourself, well, if they had the largest holding, why would they push the price lower? What the Asian authorities observed is their pattern as we get close to month end, realize we're right there, right? As we record this on March 25th, this great feast day in Christendom, we are 5 days from the end of the month when options expire. And what this firm has done is they would buy shares in the underlying stock, or in this case, the ETF, the SLV. And as they bought those shares, they would simultaneously buy puts, which are derivatives that profit if an investment decreases in value. So they would then begin selling the shares that they had accumulated. And while they were losing money on those shares, the value of their puts, their derivatives, were levered, and they made massive net profits from it. So this is what we think is going on now. We also have conviction that Jane Street is not the only fund that is doing this, that there are others in New York who have recently made massive profits from this same behavior, and that this is not only creating a short-term opportunity, but again, it does not negate the long-term bullish story. We'll leave you with one consideration here. Is Jane Street being encouraged to do this by an even larger entity with a strategic reason to push silver lower? We don't know, but notice the comments from foreign participants saying that they too are observing the same type of mysterious action in terms of the trading patterns, when the volume comes for sale, at moments when it's illiquid, that suggests this is unnatural selling. Realize too, throughout history, people have been able to push around asset prices, meaning governments have been able to push them around temporarily, but they have not been able to do so permanently. If that's all it took, ancient Greece would still be standing. They would have had the solution to their debts. You cannot solve a debt crisis with more debt. according to everything that we've observed throughout history. Now, could this go much longer? Possibly, but we think we're close to the end of this, which is why we would be encouraging you to take advantage of this window and lean into it. Consider this chart. This is showing the monthly fund flows of GLD, which is the gold equivalent in the ETF space as a proxy for the price of gold. What you see is that in the month of March, we are seeing selling that we haven't seen since 2013. Friends, when you see retail selling this dramatically, you want to look at that as a contrarian indicator. The mass public gets things wrong. They're buyers at the top, they're sellers at the bottom. So we believe this is a very notable data point suggesting that we are largely through this correction. One more consideration for you. This chart is showing the bull bear index on gold miners. So basically what you see is that the percentage of bulls is in free fall, again, going back to a low you don't see frequently. Specifically, at the time this chart was taken last week, 97% of the participants said they were bearish. They were negative already on the price of gold. So again, think of that as a contrarian indicator, giving us more conviction that this sell-off is worth leaning into. So we want to encourage you to recognize, yes, conflicts like war generally are positive for the metals. Here we have seen our debt crisis begin to deteriorate at an accelerating pace as the war costs have risen. We are seeing inflation, right, taking more of your dollar. The dollar is going less, is paying for less than it did previously. So these fundamental underpinnings of the metals are intact. We are still at a point where Americans and Westerners don't have sufficient allocations to gold. Remember, the largest hedge fund manager in the world updated the world last quarter, Ray Dalio, and he said American advisory accounts have less than 1% of the wealth in gold. That is not sufficient to protect you because, as Dalio also observed, portfolios need 15% allocations to gold to be optimized. If you look at a shorter time frame, we see Dalio's math playing out perfectly if you go back 100 years. If you look at, say, this millennium, 25 years of data, you needed a 25% allocation to gold to optimize it. So the key point is to say to you, these 0, 1, 2% allocations are too low. Lean into this buyback. Get your allocation to a more appropriate size. Looking forward, history suggests you're probably going to need an even higher allocation to optimize it. So just know, it's impossible to say what the ideal number is, but history is clear. You want a larger allocation than most realize today. So many people say to us, we have remorse that the metals have done so well and we didn't have a bigger position. This is a type of historic sell-off that you want to lean into to add. Think about it. If we're wrong, and if metals have peaked here, we are saying that somehow we are about to fix our debt crisis and the dollar is about to explode in purchasing power. We're going to see stocks, bonds, and real estate do spectacularly. The probability of that is happening is unlikely. Again, we've never seen it from a currency perspective, and realize the asset class that Wall Street has been geared to believe is conservative, namely fixed income, has been shell-shocked here this month. If you're not aware of it, private credit, a multi-trillion-dollar asset class, has been seeing repeated instances where the most respected funds in the asset class are telling investors they can't have all the money back that they want because it would create serious problems with the underlying investments. I would only say to you people, I was an employee at Lehman Brothers. When you see entities saying you can't have your money back, it is a red alert moment. Hopefully it works out well, but in my opinion, what we're going to see with these private credit funds is that the marks to market are not only too rich and inappropriate in the software sector, and we just had a data point from the president of Apollo Asset Management, a multi-billion-dollar manager with vast private credit assets, saying in the technology patch, none of their marks are right. That means all the investors in private credit who have similar exposure, in his opinion, their portfolios aren't worth nearly as much as they think. I am saying to you, this is going to spread beyond the technology sector, in my opinion, in private credit. It's going to spread in private equity. We are told there are now 30,000 assets, companies that private equity is trying to sell, and they can't get a bid for it near or at the price where they're carrying these marks. So we're going to see valuations, in my opinion, on these private equity portfolios also come lower. This is a negative for real estate because as bonds trade lower, the price of mortgages increases, meaning less people are able to pay as high of a price for real estate. So Americans have been guided, in my opinion, to allocate and position their portfolios completely incorrectly for what we have at hand. You want physical metals outside of the financial system to be a cornerstone of your portfolio. Because if we're wrong, if you have 25% allocation to metals and everything else takes off, you're okay. But if what history says is coming emerges, and we have this pressure on stocks, bonds, and real estate from our debt crises, gold and silver are going to be your lifeline. And you want your gold and silver out of the financial system without exchange counterparty risk. You want the assets you can hold in your hand. That's what the Bible counseled us to buy. That is what has worked through every war, through every financial crisis, through history. Again, no guarantees, but this precedent is not like anything else we can find statistically for investors to have a liquid asset to protect them. We want to conclude with two ideas for you. One, we have had what we believe is a major proprietary breakthrough in the 401k market. To date, investors have not been able to get liquidity in physical gold and silver in their 401ks. We believe we have some intellectual property that would allow an entrepreneur whose company has a 401k, the senior executives of a small or mid-sized business, or any business for that matter, to get their employees exposure into physical gold. And if you are an employee at a firm participating in a 401k, you can bring this to the attention of your senior management. If senior management wants to allow his employees to get a portion of their wealth into physical gold in a tax-preferred manner that does not trigger a taxable event. Repeat, this is not going to trigger a taxable event. We believe that there is a legitimate and low-cost way for employers to give this great blessing to their employees. So reach out to us about that. Lastly, as we record this again on March 25th, the headlines are out there that it looks like America is planning on sending our troops overseas for this war that we were promised we would never get into. The Bible is clear. If we pray and fast, we can protect those in harm's way. Our soldiers and their families are laying down everything for us. So I implore you, if you love our country, and I know so many of you patriots do, step up with us. Let's do all that we can to protect our troops. Reach out to us. We would welcome keeping up to date and bringing you along. We publish every day our prayer, our fasting schedule, trying to encourage you, making it easy for you to do so. We would love to have you join us in this crusade for our gallant patriots. Reach out to us also as it relates to the metals. We will gladly step you through what it takes to craft a solution for your family based on what history says is next. God bless, and God bless America.